In this video, I'm going to talk about why candlestick wicks are so important. Stay tuned. Hey traders, a very warm welcome to you. Okay, so candlestick charts, bar charts really as well. Anything where we're taking information about the high, the low, the open, the close of the day. Why are wicks so important? So first of all, what is a wick? Most of us know, but let's just run through it in literally 30 seconds. A wick is basically the point of the candle, which is showing us the high or the low. So the body of the candle shows the open or the close. If it's a red candle, it means it's a down day, it's closed below the open. The upside wick is showing us the high of the day, and the downside wick is showing us the low of the day. And we could get candles that are pretty neutral, you know, with a little wick like that. That's the high, that's the low, that's the open, that's the close if it was green, close open if it was, open close if it was a red candle. But I think most of us get the idea on that. If you're not, go and check out some previous videos where I've done quite a few things on candlesticks and the basics of that. Anyway, we've got that out of the way. Let's talk about why these wicks are so important. I'll tell you what, guys. Wicks are probably one of the things that have been the most profitable type of pattern for me over the years. Now, let me put that in perspective. I'm not just trading wicks, but what they actually mean. Let's drill into that because this is what it's all about. When we see wicks generally, not always, but again, we're going to have to put them into the context of where we see them, are telling us an intraday change in sentiment. Now, I'm talking about daily charts here. It also works on 15 minutes, 5 minutes, any time frame you like. 1 minute, not so much. Obviously, as you go down the time frames, they're going to be less and less valuable. But let's talk about daily for now. What a wick is telling us is it's a change in sentiment intraday. Okay, so in this example here, this is basically what's happened. We've got the open, which is going to be here. We've pushed up, which is our high here. We've pushed down through the open, and we've closed, which is going to be here. So we have had this. Now, the bigger this candle relative to the others, the more interested I am in this. I love to see this because it means that there is a supply-demand shift, a significant shift in the middle of the day. It means that it's urgent. There's some urgency there within a small window, few hours, whatever it is. Whatever's happened has changed the sentiment of that market. That's why these are some of the most profitable things you can do. Okay, maybe not, we call it wicks, but it's the shift in supply-demand imbalance. Why is that so important? That's what we're looking for as traders, guys. If we're buying a pullback, we're still looking for that shift in supply-demand imbalance. If we're selling a resistance level, we're looking for that shift from demand to supply coming in. Whatever trade we're making, we're always looking for the shift in supply-demand imbalance or the continuation or something. Now, some of us might just buy highs and for trends, fine. That's not my thing. I like to look for turning points, still jump on trends, try and finesse it a little bit, which is why these things are so good. Okay, so let's look at what causes them and then put them into some context as well. So we get things like news, obviously. We come out in the middle of the day, some bad news comes out, hits the market, hits the stock, and it changes the whole game. We get the wick to the upside, it's left its little footprint on the daily chart, it's gone into fresh highs, and the whole thing has changed. People's perception of it has changed because the news is either negative or positive, depending on which side we've got it. And by the way, this one is this here. That candle is that candle. So number two is the sentiment. In other words, this might not be news-based. It could just be that people have literally changed their perception of the market. Now, why would that happen? Why would someone change the perception of the market? This comes down, and these are really two tied together, guys. If you imagine a market coming up over a resistance level, okay, two things are going to happen. Well, three things are going to happen there. It's going to hold there, it's going to carry on, or it's going to reject. Very often, as you will know from seeing your charts yourself, or you look at currency charts, stock charts, indexes, cryptos, whatever it may be, you often see a significant rejection at those levels because people are, one, waiting to sell as we come above that level, whoever it may be, and buyers are unwilling to buy any higher. That's why we get this supply-demand, this S&D supply-demand shift, because it moves up from demand. All of a sudden, the buyers are backing off. They don't want to buy anymore. That's considered too pricey for them for whatever reason. That's their own business. Perhaps sellers as well perceive that as good value and start hitting it. So we get that, as we talked about before, supply-demand imbalance changes where you've got buyers backing off and sellers coming on. That's when you get the extreme, and we get the extreme reversal. And then momentum carries it and giving us this kind of pattern where we get the close below the open, and we undo all the work from the high. The bulls are caught out with it, and then we get a drive to the downside. You know, sometimes it's not obvious why this happens, but it happens, and it's worth paying attention to. So let me just rub this off a little bit, guys, and then we just look at some. In fact, I'll rub this one off here. We don't need this one. Just pointing out that really bodies can be any size. We can have massive bodies and massive wicks. The most important thing we want to see is we want to see volume on the day, a key level broken, or some sort of news catalyst, right? So the bigger volume on the day, and this is relative volume, by the way. So if you've got volume, if you've got your volume chart and it's chugging away, all of a sudden you get good volume and you get a wick, whether you're upside or downside. And again, let's put it in perspective in a second. That is interesting. That is worth looking at, because it means a lot of people are now shifting their focus or shifting their attitude towards that a market, whether it's in a positive way or a negative way. So, and it's worth us looking at it, because when a lot of people are doing something, if we can get on it before the rest of the crowd get involved, that's how we make our money. So volume, definitely gonna look for that. Key level, as we talked about, if it's gone above a key resistance level, and this is some of the best trades out there, guys. If it's gone above that key resistance level and it's formed a wick, come back under, close below it, brilliant. Even better, let's put this into more context. Have I got some room for it? Let's see, hopefully you can see this here. Even better if we're in, let's make it red to stand it out a bit. What colors have I got in my pocket? Black, no, I think I've got a red here. Yeah, let's go with the red. Let's say we're in a downtrend. We've got a downtrend, we push back up again, so we break through that resistance, then we get a wick. Brilliant. This is ticking every single box for me, and we've got volume as well if we like that. So in other words, okay, if that's resistance but it's in a bull market and it's a wick, I'm not that excited about that, guys, because we are in an uptrend. I'm not going to really fight the trend. I'm not that keen on fighting the trend. However, if we're maybe range bound, that's okay, and we've pushed up against resistance, and often we get that range break freight type trade that comes up, breaks through the high, comes down. If that's an intraday wick, that's good as well. Or even better, if we're in a downtrend, we're consolidating for a bit, we're attempting to push up, and we get that intraday wick above a prior resistance, but within a downtrend. I'm try not to overcomplicate it, but that's what we're looking for. Then we see the wick, then, you know, I'm in on that, because that's the sort of thing that I love to see. It's people testing a level, demand, no continued demand, intraday change in sentiment, especially if we've got volume as well, bang, I'm looking for a break through the lows, and I'm going to be extra aggressive on that, and I'm going to be selling that probably as the wick forms and as we're going through the range, and probably hammering some into the stops, into the lows as well. All right, guys, what else we've got? Final one is news. You know, if we can get that third thing of news, even better. You know, we don't always get it, but let's say it's earnings. Earnings, a market gaps up. I've not got room on my board anymore. Let's scrub a little bit off. We don't need this guy here. Let's say we get some good earnings and the stock gaps up. Okay, so it pushes up. We've been trading here. All of a sudden, it gaps up to here. You know, then we get a wick and a red day, and we think, oh, actually, hang on a second, we're actually closing below the open, and we've done some business to the high side, we've failed that and reversed. Hey, and it's supposed to be good news. Perhaps this gap is going to fill. Let's have a nibble on the short side for a gap fill, or whatever it may be. So these are the kind of things we need to look for. You know, volume, big one, key level, nice to see that break within obviously the structure of the trade, and news, a nice little catalyst on news. Looking for the sentiment, looking for supply demand shift. But wicks, they sound so boring and so easy. It's like it's a wick. But when we drill into it like this, we can see why they're so good and so useful for us when we're trading. That intraday change in supply demand balance or imbalance shift is so powerful for us as traders. So have a little look at that. Let me know your thoughts in the comment section below. And if you haven't subscribed yet, consider doing so for more videos from me and other traders on this channel. Give it a thumbs up if you like this kind of stuff. Otherwise, take care. See you in the next one. Keep your risk managed. As always, guys, bye-bye.